It is June 22nd, and we have just finished the day with a profit of about $5,000 between our two accounts, which brings us to a profit of $35,000 over the last 3 months. How do we do it? Well, let's get into it. This is the Hourglass Trader, where as time passes, we make money. So you might have heard of options before. What is an option? In finance, an option is a contract which gives the buyer a right but not the obligation to buy or sell an underlying asset or instrument at a specified strike price prior to or on a specified date. Right here on the screen is kind of an example of what an option chain looks like. You may have more commonly heard of options from stories like this online where people talk about traders turning small amounts of money into riches overnight. But more commonly what happens when you buy and sell options is something that looks like this, something that looks like this, something that looks like this, or in some extreme cases when people try to go all in, something that looks like this. So what do all of these people have in common? Well, they're buying options, which means that they're losing money to people that sell them the options. In fact, almost 75% of options that are held until expiration expire completely worthless or lose a significant percentage of their value. So how do we get ourselves on the other side of that 75% so we can have an account balance that looks something like this or an account balance that looks something like this? And these are actual screenshots of the two accounts that we use on this channel. So these are our actual results year to date. So what kind of option selling strategies do we need to employ to actually get our accounts to look something like this? So what do we look for in a winning strategy? I've outlined 3 things right here that are crucial to succeeding in the option selling market. First is a defined gain. We need to know when we enter the trade the exact amount of money that we can make. Too often when people buy options, they hold on for too long because they've doubled their money overnight, but they want to keep doubling over and over and over again. That leads to people losing a lot of their money. When we sell options, we know exactly how much money we're going to make if we get max profit, so we know when to leave the trade. The second thing is defined loss. We need to know this so that we can keep our risk low. We don't want to be risking our entire account on one trade because if something moves against us, we don't want to be left looking like an idiot, like some of these option buyers that I showed earlier with the screenshots. And the last thing is lower risk, which does kind of go hand in hand with the first 2 things that I mentioned. But as long as we conserve capital, we'll always have money to keep trading. We'll take losses every now and then, but as long as we keep conserving capital, we'll be able to continue making plays. So here's some basic option selling strategies. First is a naked caller or put, covered calls and puts, and vertical spreads. So to discuss these a little further, let's look at naked calls and puts first. So this is when you sell a call or a put with no collateral meaning cash or stock. These trades have a defined gain, which is something that we're looking for. However, they have unlimited loss, especially with the calls, which is a huge red flag for us. So selling options is great, but sometimes people get greedy. They sell naked calls. They want to just collect premium on the options, and the stock goes up a ton, and they don't have enough money in their account to cover how much the stock rose, and they lose it all. That is what we want to avoid. So naked calls, terrible idea. Same with naked puts. The next strategy we've outlined is a covered call. And a covered call is basically owning a stock and selling a contract that gives the buyer the option to buy your shares at a predetermined price, which is the strike price. These hit all 3 things that we're looking for. It has a defined loss, a defined gain, and it's a less risky trade. Covered calls are a great option selling strategy. Next up are covered puts. Covered puts are selling a contract that gives the buyer the option to sell you a stock at a predetermined price. The contracts are covered in the sense that you have enough money in your account to buy those shares. This is known as a cash secured put, and you'll see us refer to it as such. And once again, covered puts hit everything that we talked about earlier. It has a defined loss, a defined gain, is less risky, and can allow you to purchase a stock that you like with a more favorable basis, which we'll get into in later videos. And the third option strategy that we outlined is a vertical spread. So this is when you sell a contract, which is what a naked call or put is, but instead of just only selling one contract, you purchase a similar contract for a lower price to hedge against price movement. This strategy has both defined gain and defined loss, and it eliminates the unlimited loss risk of selling naked options. One of the great things about vertical spreads are that they can generate a solid return on smaller amounts of capital. There is one thing to be cautious of, and it's the fact that it's definitely riskier than covered puts and calls. However, with the first four green bullet points that we've got right here, vertical spreads are a great way to use option selling to your advantage and start to grow your account, provided that you follow the advice we set forth earlier with conserving capital and not risking too much of your account in one trade. So kind of circling back and looking at those basic option selling strategies we outlined. First one, terrible idea. Second one and third one, good ideas. So you'll see in our accounts we employ vertical spreads a lot and covered calls and puts. We don't do individually, but we combine them in something called the wheel, which we will discuss in a further video. So let's circle back to the screenshot we had at the beginning of the video and actually look at the positions we had in that account where we made $5,000 in one day. So here's account number one again. We have a profit of $1,785 off three different positions. The first is covered calls on SPACE, which is part of the wheel strategy. The second is a vertical call spread on SPY, and the third is a vertical call spread on Wayfair. So all in all, those equal about $1,800 in profit and are just part of the option strategies that we already discussed. So let's take a look at the second account that we had set up. So same kind of thing going on over here. We made about $3,000 in this account with the same exact position in SPACE, just a little greater stake. Same position in Wayfair with one more contract. And the only difference here is that we have a Zoom vertical call spread. So that equals a profit of $3,000 roughly and a total daily profit of $4,752.50. And once again, just emphasizing that these are all from the option strategies that we discussed on the previous slides. We keep it super simple with our plays. But for you, the viewer, if this is your first time looking at something like this, it's probably pretty complicated. There's definitely a ton to figure out as far as which stocks do you pick, which strategies that we talked about are best for you, when to enter trades, when to exit trades, how to figure trades out, and all that will be discussed in detail in future videos that I release. I'll talk about each of these strategies individually in a lot more detail. But for now, this is just a high-level overview of the account, what we do, how we do it, and the kind of results that we get. So if you have any questions, concerns, feel free to leave us a comment. I'll do my best to get back to everyone that reaches out to me. When I first got into the options game, I was buying options like we talked about earlier in the video, and I was losing money. So ever since I switched over to the other side of it, I got the results that you also saw in the video. And if I could switch over and do this, there's no reason you guys can't either. So in the meantime, thanks for watching, and this has been the Hourglass Trader, where as time passes, you make money.